Welcome to Dairy Pod, a podcast series from Dairy Australia. Featuring a range of experts, each episode offers insights into Australia's unique dairy farming conditions, as well as personal experiences and the latest in dairy innovation.
Welcome to Dairy Pod, Sean.
Thanks for having me on.
No worries. Well, I think there might have been an introduction before this, but for those who don't know me, my name is Eliza Redfern, so I'm the Analysis and Insights Manager at Dairy Australia, but you also already know that, Sean. But today I am here with Sean Hickey, who is from Bendigo Bank Agribusiness, so thanks so much for joining me today.
No, all good. Keen to get into it.
Yeah, absolutely. So I guess probably a good place to start might be, more information about yourself. So for those who aren't familiar with you and sort of the work that you do, just a bit of a wrap in terms of who you are.
Yeah, so I grew up over in the Mallee, so not a lot of dairy there, but have experience working within both the finance and agricultural industries. So I've been within the Bendigo Agribusiness Insights team for just over 5 years now. So it's been a good time, plenty happening over that period of time as well, obviously. Now, our team provides research and analysis into pretty much most key Australian ag commodity markets. We look at prices, we look at farmland values, which is what we're going to be really focusing on today, obviously, but also touch on your kind of key business and market forecasts as well. Now, for me, specifically within that team, I'm really focused on your hort markets, fruit, veg, nuts, and also have a bit of interest in the grain sector as well. So cover off on Australian and global grain markets as well. And then again, look at your broader kind of export and farmland market trends. So as I mentioned, plenty obviously happening over the last 5 years that I've been within the team, COVID, Trump, invasion of Ukraine, everything else in between there. So certainly an ever-changing, but always a pretty exciting team to be a part of.
Yeah, absolutely. And it definitely sounds like we're chatting to the right person today, which is wonderful because there obviously is a lot to touch about. And you've mentioned farmland prices is going to be one of those key areas that we do touch on today. So we've just released our mid-year situation and outlook report. And you know, when it gets to this time of year within our industry, I mean, people are really keen to sort of see, you know, where is the next season or the new season heading and what things might look like. And milk production is one of those key areas, and I guess something that does impact or weigh on milk production is the number of farms that we have, obviously. So, there's a lot of different factors and reasons that impact the number of farms that we have or farm exits within our industry, and I guess one of those key areas is farmland prices, especially when they're high, which they have been. So in addition to our mid-year S&O report, we have also released the Dairy Farmland Values Report, which is a bit of a first for our industry. We haven't had this data or this visibility before, but we're effectively looking at land prices across the 8 dairying regions, which I think is pretty cool, and I'm sure you do too, Sean. But this is, I guess, not a new area for you guys. At least you've sort of been looking and playing with this farmland value data for quite some time in your line of work. But looking at Australia as a whole, haven't you?
That's right, yeah. So you mentioned that for this year's S&O report, we're going to be kind of looking at the dairy regions specifically, but the report that we produce a couple of times a year is obviously based across the country, looks at every single LGA in the country. Now, it is based on data of actual farm sales, and this is actually our 11th report that we've just released on Australian farmland values and the trends we're seeing there. But basically what we've done is we've actually purchased data dating back as far as 30 years. So we have a really significant data set that helps us provide pretty in-depth analysis on where farmland values have trended over a long period of time. So it's certainly found plenty of interest within the broader ag sector as a result of that. Now, just to kind of give a little bit of detail in how we go about looking at the movement of farmland, we use a median price per hectare metric for each LGA region nationally as well. So the median itself is not as readily kind of distorted by unusually high or low prices, which kind of helps us to maintain a little bit more consistency year to year in the median price of farmland movement. Now, just touching on kind of why we produce this report, the information that kind of comes out of it is that land really is often the most valuable and and really important capital investment that most farmers make in their lifetime, whether it be that initial purchase or kind of expanding their land holdings as well. So understanding how that asset has moved over the longer term, but also short term, year to year, is obviously of key importance to people as a result, to farmers as a result. And then secondly, obviously really handy from a broader perspective for your buyers and sellers to understand which way the market's expected to move and how those underlying drivers of the Australian farmland market have shifted as well. So that's kind of a key focus of the report too.
Yeah, absolutely. And I guess there's, a lot of different factors that do impact those farmland prices season to season, or even, half year to half year, because I know you guys sort of look at that period too. But do you want to talk us through, I guess, what some of those really key aspects are?
Yeah, so from that broader perspective, there's obviously kind of key 3 or 4 drivers. Most people will be aware of them: interest rates, commodity price movements, seasonal conditions, but generally the overall supply of land is that other big one. We talk about consolidation quite often. So interest rates, that most obvious driver, probably particularly from a demand perspective. Obviously a cost that impacts both your margins, but also drives borrowing power as well. So we saw those record low rates during that kind of 2020 through to 2022 period, and that really helped to accelerate the boom in the Australian farmland market that we have seen. But the interesting part of that was when we did see the additional, I think it was 25 basis point rises across 2023, the impact that immediately had on demand and tightening up the farmland market to a degree. And that's obviously flowed through into the 23-24 season, which we reference in the Farmland Values Report in the S&O. So that's kind of one of the key metrics that obviously impacts demand. Now, the other one, which is a little bit more interesting, I suppose, is your agricultural commodity prices. So they obviously have a real big or a large impact rather on farm incomes, and they're expected to remain a key driver of buyer appetite for farmland purchases as well. So looking at that kind of 23-24 report period, we obviously saw a real improvement in livestock prices across late 2023, but also into 2024. So that was a real positive there. Obviously, from a dairy perspective, there was still those really strong milk prices providing support. Having said that, kind of partially offset by a really challenging operating environment from an expense perspective. So there's a couple of competing drivers there, I suppose you might say. So commodity prices is an interesting one. It's a little bit harder to directly measure the impact on the farmland market, I suppose, in comparison to what you'd say with interest rates, which is a much more direct impact. But nonetheless, it still is one of those underlying drivers that certainly does drive or direct farmland prices. Now, seasonal conditions are an obvious one. Obviously, we've seen pretty dry conditions lately, and that's had a significant impact on sentiment in terms of those interested to buy, but also sellers potentially looking to hold off on selling their farms into what is a more challenging market. So they might potentially look to hold off on that as well based on your seasonal conditions. And then lastly, I probably carried on for a little bit, but that supply of land is the broader one that I did mention there. We've seen years and years and years of consolidation now, I guess. So farming land broadly is just becoming more and more tightly held. And we've seen that in our report, that continued trend lower in terms of the number of farmland sales each year as a result. And that's certainly driving some competition to secure land when it does become available.
Yeah, for sure. Which I think that's obviously a very good wrap in terms of, what things have, I guess, looks like over time and obviously those key areas. But, as we've mentioned, we've produced this dairy-specific report looking at our key 8 dairying regions. Obviously, dry conditions in several southern areas is a key factor at the moment. But the report that's been produced is looking at farmland values over the last decade. And so, we've seen that farmland prices have only just continued to rise over that time. Are you able just to give us a bit of a wrap in terms of sort of what that's looked like over that 10-year period?
Yeah, so that longer term perspective won't be a surprise to anyone that there's been really strong growth across pretty much every dairy region over that time. So I think we saw from a national perspective the average growth sitting at around 10% over the last 10 years. Now, the 5-year growth average is obviously a fair bit higher at that. I think it's sitting at 14% in comparison. obviously on the back of that real acceleration of growth we saw over that kind of 2020 period. So no surprise there. In terms of the actual regions themselves, South Australia and Western Vic maintained the highest 10-year average growth rate figures at a region level from your dairy perspective. So they're both sitting around the 13% mark. Now, interestingly, Gippsland saw some of the lower growth over that 10-year period. So they're sitting at around that 7% mark. Now, you mentioned that it probably appears a little bit disappointing. Probably worth noting, though, that Gippsland is far and away the highest priced dairy region that we've looked at from a farmland value side of things. So while in percentage terms, it is lower in comparison to some of your lower priced areas, from that actual dollar and cents perspective, that the growth there is still really strong. So no surprise there, but yeah, broadly a positive kind of long-term outlook, I think, or long-term historical growth for dairy regions.
Yeah, for sure. And you were mentioning earlier, I guess, that theme around consolidation and that availability or number of sales, I guess, is probably the better terminology to use. But that's been coming down, I think, over the last 3 or so seasons. And so that probably takes us to the latest season that the report covers, which is that 23-24 period. Are you able to sort of talk us through, I guess, what was happening specifically within that year?
Yeah, so the 23-24 season, in terms of your dollar per median hectare, it grew by 10% or just over 10%. So again, was kind of in line with what we've seen over the last 10 years. So from that dollar and cent side of things, it's now sitting at just under $13,000 per hectare. Obviously worth noting that, just quickly, I think you did mention it off the top, but the dairy regions included in this report, it still covers all farmland transactions within that region, so it isn't just dairy sales. So just touching on that quickly. Now, in terms of how we saw the actual individual regions move, the Western Australia dairy region and the South Australian dairy region during that 23-24 period, they did see a strong growth, or they led the growth statistics, but that is coming off a pretty low base, as I mentioned before. So they did see strong growth, but again, off that lower dollar per hectare kind of side of things. Now, Tassie, Western Vic and Gippsland, they were some of the poorer performing areas. So growth stalled across these regions, coming off that very high dollar per hectare base. So stabilisation of median price per hectare isn't really surprising in these regions, given some of the headwinds that we saw to demand and buying power. So that really lift in interest rates, but also the more challenging seasonal conditions as well, particularly at the back end of that 2023 season. So not a real surprise to see the higher priced regions perhaps finding some more challenging demand or encountering some more challenging things on the demand side in comparison to some of the lower priced areas.
Yeah, for sure. I think, again, we're sort of talking about seasonal conditions around and also around that operating environment, and the input costs would come into that picture there, in terms of whether that's pressuring farm margins and those kinds of things. And within dairy, I mean, especially over the last season, we've seen that input costs have continued to rise, especially in those regions that have been dealing with weather constraints in some form or another, whether it's dry in the south or wet up north towards Queensland and northern New South Wales. So there are some challenges within that space, and ultimately, that would probably have some impact on that demand side going forward as far as farmland values go. But most people may not be aware that you guys also produce the grain report for Dairy Australia, and provide your insights and your data for that report that we publish on our website. And you mentioned at the beginning that you're a bit of an expert on grain markets. So we're seeing that prices of grain prices have increased a little bit in recent times, and there's been a lot of, I guess, probably both domestic and international factors that have impacted that. Are you able to talk us through what's going on in that space a little bit?
Yeah, it's been plenty happening in grain markets, particularly from a global side of things with everything Trump tariffs and trade. So we've looked at this in depth for quite a period of time now. Probably since February, there's been plenty of commentary on this, but taking, I suppose, a local market view and looking at how things are looking at the moment, activity is pretty subdued at the moment. Growers are really concentrated on getting their winter crop in the ground and are pretty comfortable with their position for now. There's plenty still holding on to their barley to an extent. Most are really fully sold on canola, and wheat's been perhaps one of the poorer performers in comparison to what you'd see on a typical season. Now, in terms of some of the key drivers, we've seen that real firmer Aussie dollar come about over the last 3 weeks, month. Some weakness in offshore markets as well. So there's some more positive news coming out of US and European production. So that's starting to weigh a little bit on the global grain complex. And then limited export demand. Now, this is probably a key one for us, especially coming out of China. So typically around that kind of January, February period, you start to see a real lift in Chinese buying of Australian wheat in particular. Now, they have built up their stocks over the last couple of years, so they're not as interested in purchasing our wheat from the export side of things. So we haven't really seen a significant competition to secure supplies locally, whether it be, particularly for export, which is really been a little bit of a disappointment in terms of where grain producers hope prices would go. So it's really kind of fed into that more subdued market activity as a result. Now, it's interesting to see that the difference between your feed grain and your higher protein milling grade grain. So feed grain demand across your southern regions is obviously really elevated at the moment. Those significant rainfall deficits in South Australia and Western Vic are driving pretty significant interest in securing some feed grain supplies there. So that's resulted in a real tightening of the premium between your feed and the milling wheat. So I've got a couple of figures here. Now, if you look at this time last year, ASW and SFW wheat was trading at around a $30 per tonne and $90 per tonne discount to APW wheat. So to put that into context, as of recording at the moment, that discount sits at just $6 per tonne and $20 per tonne respectively. So just shows how much more significant the demand is for your feed grain or your feed quality wheat, whereas that lack of export demand for your high protein wheat there is also having the opposite effect. So a significantly different environment probably in comparison to what we were operating in a year ago.
Yeah. At the beginning of your commentary there, you mentioned, I guess, the T word, if you will, which can mean a couple different things, tariffs, Trumps, both. So I guess it probably leads us into our next question around that US side of things and the significant changes or potential, I guess, in some cases at the moment around that trade policy side of things in terms of what Trump is sort of thinking and potentially acting on there. Have you noticed some response within key farming input markets, in response to the announcements that have been made so far? And I guess what's your take on in terms of how things might progress, at least over the next couple of months or so, keeping in mind that he can change his mind at any point and it could throw the whole thing out of whack. But yeah, any thoughts that you've got on that space? Because I'm sure people will want to know.
Yeah. Look, I think as long as you say volatility and uncertainty, you're probably on the mark, really, aren't you?
That's right.
Look, it's been a pretty challenging time to predict what's going to happen in global markets from the tariff side of things. We saw the tariffs be announced and the 90-day reprieve, with the exception of China. I think China and the US now have just started trade discussions, and that's looking quite positive, which has provided a bit of a boost to market sentiment as well. Now, in terms of what we're seeing from the grain side of things, look, we don't expect it, in terms of the Trump tariffs specifically, to have a significant direct impact on Australian prices. So if we look at China, and we speak about China now, let's be honest, when this episode releases, there's probably going to be some changes in the meantime. But if we look at China, and if China decided that they didn't want to buy any more US wheat, they typically only purchase between 1 and 2 million tonnes of US wheat a year anyway. So you don't see a significant shift in global trade flows as a result of that necessarily. There was some hope that you might see some of those Southeast Asian markets perhaps look at buying less US wheat. Doesn't appear like that's going to be the case anyway. So look, there might be a touch of upside for Australian grain resulting out of these tariffs, just because we might see some slight additional demand, but not significant. So we don't think there's going to be a real uplift in Australian grain markets, at least not off the back of the tariffs and the trade scenarios that the people are in at the moment. Now, exchange rates are a real interesting one. We saw the Aussie dollar fall to or plunge following the announcements of tariffs, particularly those on China. Our economy is so tied in with China that our exchange rate does fluctuate based on kind of their economic performance, I suppose. But with that improving trade relationship between the US and China, there's probably potential for more upside, especially in comparison to the US dollar specifically. You see people talking about, stagflation risks in relation to the US and the longer term impact that might have on the US dollar there. So generally, I think most are pretty stable on our exchange rate forecast to slightly higher against the US dollar over the course of 2025. Now, that obviously flows into input costs more broadly, particularly your fertilizer and your diesel pricing, which is interesting. We obviously import the vast majority of these inputs. So that higher Aussie dollar is a positive from that perspective. It was a real concern when we did fall into the 50-somethings US cents and the impact that might have on prices. But once you go the other way, the buying power certainly improved. There's obviously a range of other factors that are going to impact there from a production side of things. And I know that China have restricted exports in the past of some of their key fertilizer exports. So that's probably going to have a bigger impact along with the Russia-Ukraine situation at the moment. But it's certainly a hard to predict and volatile time to be providing market commentary on.
Yeah, absolutely. Yes, which I think is always the case, especially when you're sort of talking about outlook things. It's unless you've got a crystal ball, of course, it's very hard to sort of talk about potential outcomes going forward. But this tariff and I guess trade policy side of things from the US definitely throws a spanner in the works. That's for sure. So it does make forecasting a lot more fun from that perspective. Now we've spoken about Farmland Values Report. We've touched on the grain report that you guys do for us. That's not all that you do, though. There's a lot of other things that you work on. Did you want to run us through some other reports that you guys have got on hand?
Yeah, look, so we obviously do the National Farmland Values Report, but we also provide your monthly commodity outlooks. So that covers most of your key ag commodities. I think I kind of mentioned that up at the top there. We host our own Unpacking Ag podcast as well. So that's more of a fortnightly ag market update or focuses on the kind of the key news of the week. Now, within that, we do various trade reports and ad hoc reports as well. So that might be focused on exports, imports, and then some of the key global news too, whether that be Trump and trade or whether it be something else. So certainly worth checking out. Just jump on it and check out Bendigo Bank Agribusiness Insights, and you'll find it all there.
Wonderful. And that probably brings us, wraps it up nicely to the end there in terms of just letting you all know as well that you can find the mid-year S&O report on the Dairy Australia website through the industry reports link. And you can find our dairy industry specific reports through that part of the website as well. So thanks so much for joining me today, Sean. Really appreciate having the chat with you.
No worries at all.
Thank you for joining today's Dairy Pod episode. We hope you found it enjoyable and insightful. For more information, check out the episode notes. You can stay up to date by following Dairy Pod on your favourite podcast platform. To get in touch, visit dairyaustralia.com.au. Until next time, take care.